Following me know that I'm not a fearmonger. I don't, create fear to sell newsletters and predict crashes and go crazy like that. I just predicted a crash only one time in my 25-year career. I've been doing this for a long time, and that was when I saw China closing in January and all the stores closing. That was led to, accounted for 40% of the world's growth. And seeing that COVID was coming here, we were able to get a lot of clients out and save money because, the writing was on the wall. I mean, all the businesses were closing and get a lot of these crashes dating back to 87. You go look, the writing's always on the wall. The housing crisis, the writing's on the wall. Right now, there's something that has me terrified. And it's one word. It's a word that's been used by so many people in the past, in the 70s, 80s, 90s, and a lot of them have been wrong. But I'm not a perma bull or perma bear. You'd never heard me really say this that much. It's something I worry about. But this word is actually very, very dangerous. It's the most dangerous thing in the world when it comes to markets, and that's inflation. And inflation, guys, is absolutely here. And I'm not talking about, your prices are going up, yes. But I want to show you some examples. I like sharing my screen here. You're looking at prices that are up tremendously. So this is Evercore, and, they're on board with this as well. And they're talking about core import prices, which rose 0.69%. Not a big deal, right? That goes under the radar, 0.6%. Look what the compound annual rate is, 8.6%. Look at this chart. I mean, this is crazy inflation. Now, we all hear about the CPI, 2%, right? 2%, it's not growing more than 2%, we'll be fine. Maybe it goes to 2.5%. You see the Fed flirt with it because they know it's going higher. And again, that's a dialed down version that the Fed looks at, that it's almost impossible to create lots of inflation through that, right? That's their gauge. We all see inflation. We see prices being raised throughout. Every single thing that we do will raise tremendously. But right now, CPI came out, 0.34%. All right, under 2%, we're not worried about. The compound rate is 4.2%. We are at 4.2% right now. With the Fed, they already injected 10.5%, right? $10.5 trillion into this market, which is 50% of GDP, 3 times more than any other country. Pedal to the metal in terms of low interest rates. And we're sitting in a really, really crazy market. Again, when you look at these statistics, it's really scary. Now, let me show you something else. These are things I've never seen, like in my life, in a career. America's short of home builders? Yeah, you might have saw that during the housing crisis. Yeah, that's fine, okay? But I mean, look at these numbers and the shortage. I mean, it's incredible. Like, there's so much demand that you're seeing plants closed. Have you ever seen that before where, GM and Ford had to close their plants because there wasn't enough chips available? So when have you ever seen that? I mean, to me, that's a red flag. I'm trying to look at past historical events and how that happened. I can't figure that out. I don't know, maybe you can. But, the demand that we're seeing is incredible. Look at the Sony PlayStation 5. You still can't get it. You look at Best Buy stores, their shelves are empty because there's no inventory. So why is all this happening? Everyone's being given money at the same exact time. And the scary thing is when you look at inflation, what causes inflation? Again, we look at some more examples here that I could show you. The pandemic's effect is one of the things, which the writing on the wall, is wage growth. So right here, this is just released in 2021, right? A couple days ago. But they go back to April 2020, right? BLS reported that year-over-year growth in average annual earnings, and I'm going to show you the screen here, skyrocketed to 8%, the highest observed since the series began in 2006. That's interesting because wage growth was exploding. That is the number one thing. I know most people don't understand inflation. It makes sense because we haven't had inflation. No one has any idea of why we didn't have inflation in 2011, 12, 13, 14, when we had lower interest rates. Everyone was predicting we're going to see massive inflation. We didn't. So the Fed kept rates low, super low. And what did they do? They just kept handing out more and more money. That was easy, right? There's no consequences. Everything's fine. Now you're looking at a market where we're seeing inflation to the point where restaurants are operating at 60% capacity. It's not because of COVID. Especially where I live in Florida. I took 2 restaurant owners. They're not operating at full capacity and 60% capacity because they can't find workers. When have you seen that? The only cure for this is rising prices. And what are we seeing? Well, you can go down the line. So Disney's raising prices. Procter & Gamble said $200 million in additional freight costs are expected. So they're raising prices September. They have to. Owens Corning, Hilton, Netflix, I mean, their numbers were actually pretty good. The subscriber numbers were crappy, but look at their margins. Why? Because they raised costs. The average revenue per user is going higher. Everybody is raising prices tremendously. The Fed should be taking their foot off the pedal because, again, a lot of people were not familiar with inflation. I get it. We haven't seen it in 20-something years. But in the 70s and 80s, Volcker came in and just revamped the whole system. And it was, hey, we have to raise interest rates. That's one way, right? Which is not going to happen. The Fed said, hey, we're going to keep interest rates low forever. You're looking at other ways when it comes to bond buying, right? They continue to buy bonds. They should be selling those bonds, right? So they're buying bonds, they're injecting more and more money, more and more liquidity into this market. And what do you have with stimulus? More and more stimulus is coming. Another 2.3 trillion stimulus is coming. So I know this is going a little long with 5 minutes. I cover this in detail, guys. Please listen to Wall Street Unplugged podcast. It's absolutely for free. We have a great guest on there too, Amir Dani, talk about uranium. I know there's a lot of uranium fans out there, but that's, all that stuff can be found on a Curzio Research YouTube page or through iTunes. But please listen to the statistics. I break them down tremendously. This is something that has me worried. When I see things I've never seen before, the fact that we have so much inflation right now, we're at over 4% on CPI. We're at over 4%. And we should be pushing back. And when you do, you have to take a step back and it results in less wage growth. You usually go into a little bit of recession and the pain will be eased. But right now, if the government and our politicians who don't know a thing continue with the pedal to the metal, it's basically putting gasoline right on that inflation fire. And it's very, very dangerous. Something has me worried. Again, something we could change it, but the Fed, I haven't seen the Fed talk about it. Like there's no inflation, everything's okay. The writing's on the wall. I'll provide 100 statistics in my podcast. Definitely take a look because it definitely has me worried. Not to the point I'm selling everything, but if we do see inflation, I'm going to tell you exactly how to pay and exactly what to sell, what to buy, and how to make money. Frank Curzio, as always, I'll report back to you guys soon. Take care.